Hi everyone, let's go through all the scenarios shown on the right, which include my preferred and alternative high time frame, medium time frame and low time frame scenarios, including potential trading setups. So I like to start on the higher time frame with the alternative, less likely scenarios. The first one is an ABC, this being a 5-wave A, then a B and eventually another impulsive C. The reason I don't like this scenario has to do with wave 3, because wave 3 did not hit wave 3 targets. The target and the minimum target usually is the 1.618 trend-based fib extension from the all-time high to the low of 1 to the high of 2. But as you can see, price did not reach this target. Instead, it bounced already at the 1 and the 1.236 trend-based fib extension, making this scenario less likely. The second scenario I like to show you is that wave A is already in, so we have a 5-wave structure. We're now working on a 3-wave structure before another 5 to the downside. But again, wave 3 did not reach wave 3 targets. Instead, it is more likely this is an ABC. The third scenario that I like to show you, which is less likely, is that this is already an ABC finished and we're now looking for a lot more upside for a continuation of the bull market. In this scenario, we have A, B and another 5-wave C. Once again, 3 came short. However, there's 2 other reasons that I don't like this scenario. The first one is that wave C over here is way too long compared to A and B in the time it took. So usually you have then an A, B and a relatively quick C, as that's an impulse in an expanded flat. This is an expanded flat as wave B then took the highs over here. But wave C is 5 to 5.5 times larger in time compared to A and compared to B, which is really long. Also, wave C is too deep as it actually crossed the 1.618 over here and closed with multiple candles on the daily time frame, but also on the weekly time frame below this area. That makes this scenario a lot less likely, which unfortunately means it's less likely that a continuation of the bull market is happening. Now, the becoming more likely scenarios, but this is still an alternative scenario in my book, is that this is a WXY or a ABC over here in a bigger W. So we have a 3-wave structure now, followed by another 3-wave structure, an expanded flat, and then eventually we're looking for a 3-wave structure in Y to the downside. Now in this scenario, wave X and wave C are already finished. So they're already finished on the high of the 21st of February. And then this first move to the downside over here is an A structure, now followed by a B structure, which should then hit in an expanded flat, should hit the 1.38 and the 1.236 Fibonacci taken from the high over here to the low of A, as this is the most common expanded flat wave B target area. So we are then looking for a 3-wave. So far there's no 3-wave to be found, but we're looking for a 3-wave in the B and then an impulsive C to the downside. And then if that happens, then one could look for eventually more downside to come in a wave Y with a target of right at about 10.9K, which also has nice confluence with this area that we never backtested since the bull run in 2020. Now, 2 potential trading setups in this scenario is that if this is an expanded flat wave B, it's not allowed to close high time frame candles far above the area of a wave B, so one can trade it to the downside for this wave C, and eventually a trade long for wave Y is entering in this area between basically 12K and 10K with somewhere the stop loss below and then trading it to the upside. The second scenario that I like to show you, which is not as likely as well, also an alternative, is that the move down from the all-time high is a WXY. So we have a 3-wave W, 3-wave X, another 3-wave in the Y, another 3-wave X, and then a 3-wave Z. There's, however, 2 reasons, again, I don't like this scenario. The first one being the second wave X over here did not hit the 0.382 Fibonacci taken from this X to this Y, which usually is the minimum target for a wave X, and it's actually quite rare for wave X not to hit this target. And this then, in combination with the fact that wave Z also hit a rare target, which is the 0.618, with the more common targets being down here, the 1 and the 1.236 at 12K and 10.1K. So these 2 together, wave X not reaching the target and wave Z with a rare target, make me think that this scenario is also less likely. And then eventually my current most likely and also preferred scenario is that again we are in a WXY, so a red WX and eventually a Y to the downside. But in this case, we are still working on wave C. So over here, we then have a 1, 2, 3, 4, 5, currently working on this wave 5. The most common target for a wave C is the white box that you see over here between 27.7K and 34K. And also, once again, the red wave X, the Fibonacci that you see over here, the 0.382 is the fib taken from the all-time high to the low of W. And for a wave X, usually the minimum target is the 0.382, which sits at 29.7K. So that is an interesting area. Now, potential long setup is the one we already had over here. So over here, the wave 4 is not allowed to close below with higher time frame candles below the 0.5 Fibonacci taken from the low of 2 to the high of 3. Invalidation for a wave 4 is always easy because you're not allowed to go into the price area of a wave 1 and then a long trade to the upside aiming for that wave 5. A potential short setup then is to, well, we got to see and get more information on where price might exactly turn around, but in general one can enter short positions in this scenario with a potential trading setup because no advice inside this wide area, stop loss somewhere above, trading it to the downside for wave Y. Something that is important to notice is that there is still a rare wave C target above the most common wave C target, so that is something to take into account with a potential stop loss. Then on the medium time frame, my bearish scenario is also the more bearish high time frame scenario, basically, where the high of X and C is already in, and we're moving in an expanded flat for eventually more downside in wave Y. Now in this scenario, you can see that we then have a WXY in the A, and we're now looking for a three-wave structure in the B. However, so far this has been very impulsive, so we really need to get some more downside, and if I move the retracement up, we need a downside to usually at least the 0.5 Fibonacci, which currently sits at 23.1K. So then you have a 5-wave structure, eventually a move to the downside, and then another 5-wave structure. And in an ABC zigzag in this scenario, the 1-to-1 trend-based fib extension is the most common target for a wave C. So the 1-to-1 of A is the same as basically the move of C. That also means that because price already went so high and almost hit the wave B most common target for an expanded flat, this wave B has to go really deep for the 1-to-1 line to eventually end up inside this area. Because what happens is if wave B only stops at the 0.5, then we're gonna see over here that the 1-to-1 is far above the wave B area right now. So the 1-to-1, it really has to end inside this area somewhere, and that means we need a retracement to most likely at least the 786 and the 886, which is 21K basically and 20.4K. So only if price now is coming this low, this ABC might be reasonable, but as long as price is going to stay somewhere up here or around these areas, this scenario is not likely. And then we have the more bullish scenario where, again, this is the high of wave 3, by the way. This is then the low of wave 4. Wave 4 had a WXY. Y hit a rare target for a wave Y, which is fine. And then we have this impulsive move to the upside. Now, currently on the medium time frame, it's quite difficult to count this, as you can see. There's not a lot of structure. You could say it's a 1, 2, 3, now working on a 4 and eventually 5 to the upside. But also with a potential trading setup, well, there is none because we don't really have any structure. And because price is already so high, we don't just want to buy because price is high. We want to wait for structures, wait for something to form, a range or whatever it is, to give us more clarity and a better idea of what then happens on the medium time frame to enter potential positions. Now on the lower time frame, there's two scenarios that I also shared in my community post on YouTube last night when I saw this drop happening. And there's two scenarios that I'm looking at the moment. The first one is that this is a wave 1 already finished. We're now working on a 3-wave 2, the green one, and then eventually we move up for 3, 4, and 5, with then the most likely case now in a wave 2 is a zigzag, This being, and I'll show you in the lower time frames, this being basically a wave A, then we have a wave B and a wave C to the downside, with the golden pocket area, very common target area for wave 2, sitting between 22.5k and 22.1k. However, wave 2 has more areas of interest, of bouncing basically. The most common areas of bouncing for a wave, or of support in this scenario of a wave 2, is between the 0.5 fib and the 7/8, which is basically between 21.3k and 23.2k, but I like to have the most common target, the golden pocket, over here on the chart. The second scenario I'd like to show you is that this is only a wave 4 and we're still going up for 5. So the wave 1 is then this one, and then 2, 3, 4, 5. However, on the more local time frame, this then is a 1, 2, 3. Then we are now in a 3-wave 4, which usually ends between the 382 and the 0.5 fib. The moment we go below the 0.5 fib, sitting at 23.2k, this scenario becomes less likely, and the other scenario I just shown becomes more likely. And then eventually from here, we look for a wave to the upside for a potential wave 5. So trading this, of course, the potential trading setup would be entering somewhere in this target box, stop loss below, well, the 0.5 really, because that is usually the invalidation. I put the invalidation currently below here, below these lows, but that is very low. Once again, wave 4 usually does not end below the 0.5, and then trading to the upside. However, if I look at the lower time frames, the other scenario might actually be my more preferred scenario, being this one. But yeah, let's go to the very low time frame scenarios, because then I can actually show you what I'm thinking on the very low time frame scenarios. The first one that I like to show you is, for me, the less likely one, which is that we are currently on the very low time frame. This was an ABC, so a 3-wave structure and not a 5-wave structure. So not this, but a 3-wave structure. However, the problem here is that the common targets for wave C that you see on the chart right now, which are these, are all passed. So wave C closed far below the most, already a rare target for wave C is the 1.618, but as you can see, it closed far below this. So this being a 3-wave structure, I don't like that at all. Something to note, by the way, I think is important, is that today we have news at 1:30 p.m. Central East European time. Make sure to check your own time zone as well. As you can see, these are the red flags over here. So that's important to take into account. CryptoCraft, I'll make sure to put the link in the comments if you want to check this website. It's very useful. The second very low time frame scenario that I want to show you is this one over here, that we have an A, B, C to the downside. So a 5-wave over here in A, followed then by a 3-wave B and C. The minimum target has already been hit, so a continuation to the downside is definitely possible. And what I would also like about this scenario, if this is an A, B, C, so B is already made over here, then the target for wave C is the 1-to-1, which also is very close to the target box that I have over here with multiple confluences of support. So that is actually quite interesting. And then the last scenario in this video on the lower time frame is this then being a 1, 2, 3. This is wave 4, and then eventually we go down for wave 5. So this impulsive move is basically not yet finished. With inside this wave 3, we then have a 1, 2, 3, 4, 5. So then that makes a 1, 2, 3, 4, looking for 5. Now we could say, hey, you don't have a target box over here. Is there any support? I mean, we can find some support. There's a few lows to take. There's a little bit of a minimal range. And if I open 2 folders over here, there is a time naked point of control just below the target area for wave 5 over here, sitting at 23.25k. And also the high time frame range point of control, the wide line, is basically sitting between the wave 5 target area and the target box, which if we wick inside and then close inside the wave 5 target area can be interesting. But then again, it's stretching it a little bit, you know. I would still prefer this scenario at the moment, where we then have an ABC and reach basically this blue target box. And if we reach this blue target box, that basically also means that this is the scenario that I'm looking for. So yeah, thanks for watching this video. Please subscribe to the channel if you enjoy the content, and I will see you at my next Bitcoin update at 1 p.m. Central East European time. Bye bye.